January 27th. I am an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure is more or less the same. I'm no longer an AGQ. I've still got a good bit of metal short exposure. All right. Yeah, it's really about the dollar today. SPYs are up 0.4%. Qs are up 0.9%. The IWM is up 0.2%, so some relative weakness there. The dollar down 1.25%. Let's circle back to that. TLT is down 0.7% as well today. Oil through the roof on this oil trade today, up 3%. Gold finished up 2.4%. Silver finished up 3.4%. Platinum finished down 3%, but well off of lows. What else? Bitcoin up 2%. Back above 50. And Ethereum is up 4%. Okay, so look, the market broke out yesterday as far as I was concerned. I'm not surprised to see a continuation. What we said in the morning meeting today is that you want to err on the side of being long because the markets are in full-on bullish mode. The SPYs are in full-on bullish mode. They're a hair away from all-time highs. The Qs are in full-on bullish mode. They broke through more resistance today around 6:30. There's only one more little resistance left at all-time highs, about $5 higher in the Qs. What else? An IWM. Oh, perfect. Mentioned in the morning meeting, like I'd be a little bit careful on rushing to buy the IWM because it's been relatively weak and it's still relatively weak in the pre-market. But if it could get down to like 260, 250, maybe 262, that would be the spot that I would look to potentially come in and buy some to look for the pivot low. And today's low is 262.66. So that is pretty perfect. The metals. So gold. Gold continuing here to new highs up 2.4%. It almost looks like this is the next one that's getting ready to go parabolic, whereas our recent more speculative metals, platinum, had gone parabolic and pulled back. I haven't traded as much of this in the move. Overall, I traded a little bit of it in December, but not as much recently. And then silver was somewhere in the middle. There were some points today where silver tried to be weak, and then it was strong, and it closed pretty well, and it's continuing higher here after hours. And I think that a lot of this has to do with the dollar. So the dollar has just been getting absolutely crushed. If you guys remember, 2025, I'm not sure exactly how the statistic ended, but 2025 was one of the worst years for the dollar in America's history. I know at points it was trending to be the worst or second worst year in history, and then I know that it bounced back a little bit and held steady a little bit into the end of the year, so I'm not sure exactly where the statistic actually ended, but overall I know 2025 was a pretty bad year for the dollar. And 2026, you had a little bit of a grind up in the beginning of the year, and now just absolute and utter destruction. 4 big down days in a row. I guess 3 massive down days and 1 smaller down day. Yeah, let's just call it 4 big down days in a row. So on the one hand, the dollar is starting to get really extended. On the other hand, though, be careful. I mean, watch out. We saw that headline come out from the International Monetary Fund today that basically said that they are preparing for a scenario where there's a massive hard fast dump of U.S. Dollar-denominated assets. So they're preparing for that. It already seems to be happening a little bit. And then Trump came out into the close today and basically was like, the dollar's fine, don't worry about it. And I didn't see anything in Trump's words that should have brought us down further, but it certainly did. And I think Bill Kay, who I don't think was here today, he just said it best. Not to say that this is going to happen, but I think he said it like really well. because this is a great just way to conceptually think about what the dollar means for everything else. And what he said was, if the dollar gets cut in half, then everything else doubles. And obviously that's in a vacuum. It's everything else out equal, and no one is really assuming here that the dollar is going to get cut in half. Though I guess anything could happen. But the idea is just basically, let's remember as traders that if the dollar is worth less, then everything that's denominated in dollars is worth more. The stock market is worth more. Commodities are at higher prices. So I think today, when you circle back to the commodity trade a little bit, I think that the silver honestly wanted to give us some downside follow through. There was a big buyer here at this 96 that we were watching at a certain point. I actually thought that they were going to break it. They were applying a lot of pressure on it, and it never actually broke. But you're fighting against this dollar just getting absolutely crushed. So these metals here are still very, very parabolic at this point. Like, I still, generally speaking, like the idea of being short silver versus yesterday's high, but we need a bounce back of the dollar. The dollar is starting to get pretty concerning if you're trying to be short anything. I can't help but wonder at a certain point, though, if you start to see like a real loss in faith in the dollar, which is not something that I'm predicting, I'm just throwing it out there, which would mean that the dollar just absolutely gets crushed, that at a certain point they might start to sell like stocks as well, more U.S. assets as well. I don't necessarily understand how that would translate into gold and silver. It could still potentially be really bullish for them because you just have nowhere else to put your money. I'm not predicting that doomsday scenario. It's just another thing that's a very low probability situation, I would think, but you just want to be able to have that stuff in the back of your head. So, really all about the dollar today. The market's continuing to break out, and and then the other big one was just silver, which I thought wanted lower, but there's just too many tailwinds for silver still, and gold just really starting to go now. Gold is 1, 2, 3, 4, 5. This is day six up in gold at this point. So yeah, I mean that's where we're at. I'm trying to think if I have anything else even to talk about. My focus has kind of still been the same. I thought that maybe we could see some weakness in these semis. I really don't want to see them getting above this January 22nd high by very much, and we kind of are doing that, especially with this little push that we seem to be getting here after hours. SMH did it. SOXX has not quite done it yet. I thought that maybe Micron could hold this high from 2 trading sessions ago. It tried to at a certain point and tried to be weak at a certain point intraday, but then that broke up as well. So yeah, I mean these things are just really strong. And then we had great looking earnings come out from both STX and TXN. So the TXN numbers were phenomenal. And it had a beautiful bull pattern going into it. I don't think that TXN was, air quotes, up too much into the report to do anything but go up on that good looking of a report. The STX one is very interesting though, because the STX report to me also looks excellent, but they are trading it down on that, and I think that's more of the classic, it's just up too much into the print. I mean, you look through those Seagate numbers and they're really, really solid. Free cash flow came in at $607 million versus estimates of versus $150 million year over year. So it's not an estimate, but it's a huge increase. I think every number on Seagate is a beat, but I'm not sure where the last earnings report exactly was on this thing. Maybe somewhere here in October. Well, it's probably right here actually. But thing is traded up from probably 230 to 372 into the print today over the course of the last quarter, and this was a $65 stock just back in April. So I would assume that actually will impact SanDisk a little bit lower, and and Micron maybe as well, but we'll see. And then the flip side is with the semiconductor ETFs, TXN is an important component in the semiconductor ETFs, so that'll help to hold them up. I don't really have too much to talk about. You know, silver was the big focus today, trying to get further follow through to the downside, and it didn't trade well really today. I thought that there was an opportunity maybe if it could really break this 96, kind of give a push through failure here to the downside. I guess this is worth talking about even though it didn't work. So you had some support here at 96, right? And then you had a false breakdown here on some volume at 120 through that 96. It put in a low of 95.77, but the buyer was still there. But you broke enough recent lows that you probably suckered in some new momentum style shorts on that break. And then when you don't break and you close a little bit of a hammer, what has to happen to those momentum style shorts? Well, they need to get squeezed out. So then you get these few bars here that are on declining volume that are a little bit of a bounce up. And then I know Tate called this out. I really like this short here off this like little pivot at 135. Because if this is not real buying on these 3 bars, if this is just buying from some shorts that just got squeezed here when they tried to enter from momentum, that's not going to last very long. This is just a 5-minute candle that we're looking at. So fine, it lasts for 13, 15 minutes, then you get that high, then you get that pullback. I like that short versus that high because once you squeeze out those shorts, if there's no true buyer in this thing, then you can end up back down at this 96. And if you ever push through that 96, then we're probably going to see real momentum to the downside. So when this first was popping back up, I was like, let's just keep an eye on this low. If you break 95.77, I think that is a short execution spot because this thing could work its way back down to like $92, I think, very, very quickly. And it never triggered, so, the beautiful thing about potential trades that don't work is if they never trigger you, it doesn't matter that they didn't work. And then as a secondary thought process, though, just what I'm trying to get across here is that traders want to be thinking about supply and demand across different time frames. Even a smaller time frame like this, you want to recognize like sometimes why stock moves. And I wish this was a better example because if it failed down, it would just be a phenomenal example. But stock can move here to the upside because those shorts got pushed in and ran into a buyer, and then they're squeezing out, which is actually what's causing the bounce, right? So you want to think about that, and then you want to think, well, is that a strong-handed buyer or a weak-handed buyer that's causing this market bounce? And it's probably, if it's just from those shorts coming in, a weak-handed buyer. And when you lose that, you could really begin to break lower again. And obviously, there was more to it. It wasn't as weak as it may have appeared there because it ended up rallying, and I think that was also supported by the dollar, and then it started to feed on itself. And we also had that Citadel headline that hit here at like 255 or so that seemed to rip things higher. And we ripped even further just on momentum and the Trump headline and the dollar getting destroyed. But I do want traders to try to think about, on different time frames, when you study a chart, what does that previous move do to the buyers or sellers who are in the market, and therefore how are they most likely going to react the next time around? So that's really all that I've got for today. Like always, happy to answer any questions that you guys might have. Not seeing anything in the VTF for the moment, so we'll go over to the YouTube from Scott. Silver, gold, the dollar this is concerning. I'm short big silver, kind of rethinking my game plan here. Any thoughts? So just went over that in detail, so I assume that you caught that. What are my thoughts? I think that you have a game. You know how I am if you know me about game plans. You gotta be do or die on your game plans. I'm not a believer in changing your game plan as supposed new evidence presents itself. In an ideal situation, if you are an ideal perfect trader, that is what you would do. As new evidence presents itself, you would always be changing and adjusting your game plans. I don't think that I've ever met anybody good enough to do that with consistency, and the key to success in this business is consistency. So I certainly agree, as I just went over, this move here in the metals back up is concerning. This move in the dollar down is concerning. There is a chance that tomorrow silver is above yesterday's high and then you're getting stopped out. But the flip side of that is that you still do have a ton of extension. You still do have the shooting star tail from yesterday's high. And one of my favorite trades, I actually was calling this out in the morning meeting. You had to take it pre-market though, because as I was doing the morning meeting, silver started to crater on itself. But when silver was trading at 102, 103 in the pre-market, I loved that for a spot to be shorting the gap up versus yesterday's high. It's a pattern that I love. When you have a high volume extended shooting star like this, or the opposite on the downside, and then you get a gap up after it, it can present a really good risk reward to be short versus that high for a move back down to equilibrium. And it's got a really good probability of success too. There is no such thing as a perfect 100% probability of success, but it's got a really good probability of success. So, on the one hand, you could look at the dollar and you could look at the metals, and if you short them, you could say, wow, this is concerning to be on the wrong side of this trade potentially again, and it could get back above yesterday's high. The counter argument that I would make to you is this is one of the fastest, biggest down moves I've ever seen in the dollar in such a short period of time. And at this point, with the exception, honestly, of a couple points last year, March and April, but that was when the whole sky was falling upon the whole world with the Trump tariff announcements. So outside of that, this is one of the fastest down dollar moves I've ever seen over the course of 4 days. I would argue that this is due for a snapback or consolidation. Obviously, there's a fear trade ongoing here, and there could be continued momentum to the downside that could, again, support these metal prices. But if you were looking at the dollar chart right here, right now, and you were going to buy it or you're gonna short sell it, well, for me personally, I probably wouldn't do either. It's probably an avoid. But if you had to force me to do something, I would rather be a buyer of the dollar right here because of this downside extension on day 4 for at least a snapback or a consolidation rather than a short seller. So, again, just to play both sides of it, on the one side, concerns for sure on how gold and silver closed today and how the dollar closed, and you could see silver negate that shooting star candle. The other side is, well, you do still have that shooting star, and if the dollar bounces, then these are probably going to go down. The bottom line, when you circle around to all that, is I would say that you have a trade on, you put that trade on with a reason and a game plan, and you are comfortable with the risk on the trade when you put it on. Hopefully you've at least covered some into the move yesterday that went all the way down to 92 in SLV after hours, and you're comfortable with the remaining risk that you have on the trade. If you aren't, then you had a bad game plan to begin with, and that is also something that's worth reviewing. From Giancarlo in the YouTube, looking at GEV, 15-minute chart, 10:30, 10:45 candles. 10:30, a little bit of a doji there within a bull flag, and 10:45 candles where it begins to break higher. The ADMA caught up to those lows at 685. Yeah, okay, it was just getting there. But current trading price is at 689. Do you buy 689 for continuation or wait for a different signal? You buy 689 for continuation, or you buy even higher. You buy the break of the flag to the upside, which is 689 spot 72, or even these tail highs. That's technically what you buy. But yeah, what I would prefer to do is buy as best as I can within the flag. So if 689 is the price, that is the price, and then you give it to the low of the flag when the ADMA caught up. I don't like trading $680 stocks as a general rule. Wide spreads, a lot of dollar risk on it, which means I got to take a lot less size. But yes, I think that the way you're describing the purchase is the right way to do it. I covered a lot yesterday. I added a lot back yesterday. Today, when it comes to silver. So I'm definitely moderately uncomfortable as well. But like I said, I'm not really uncomfortable, but I got a big move yesterday. It helped me cover some stock. It helped me reduce a little bit. And, I'm just going to stick with the game plan on the trade. Back over to the virtual trading floor from Tate. Do you have any advice on knowing when to get out of those momentum moves if you shorted that breakdown? I assume that you're referencing if you actually shorted within the 120 candle. I personally like having a stop above that time frame 21 EMA to confirm a pivot. But do you have any other options? Yeah, I just oftentimes will actually use the high of the candle itself of the breakdown. I mean, technically that's what we used to call an ignition bar, especially when it's confirmed by an uptick in volume. You got a little bit of an uptick in volume there on that break. So I honestly probably would have used the high of the bar in which it broke from, or just use the last pivot. Probably the 115 candle high. That's what I would use. From GC, big days coming up for LRCX, WDC, SanDisk, some of the biggest movers this year and last. How would you look to position and protect long-term holdings with significant gains? Long-term holdings is the question on there that's throwing me for a loop. So, the thing that I would say about SanDisk and WDC is that my expectations of what they're going to do on the earnings report is very similar to what's happening with STX right now, which is I'm expecting good numbers, but I'm not necessarily expecting a great reaction. So, for a long-term hold, I probably would stay the course, or depending on what the strategy is of that long-term hold, maybe just sell a little bit just to make yourself comfortable because the move has been so big. But then, you could sell like a covered call or something like that if you wanted to as well, just to try to protect a little bit of those gains or bring in some cash flow for yourself. But that's it. I probably would generally stay the course, maybe book a little bit of profit because it's so big. And, the thing is, if you're in a longer term hold, then you're in a longer term hold. So you shouldn't be overly impacted if SanDisk pulls back to $400 after going from 50 to 500. Because if it pulls back to 400 to 420, it's still a healthy looking chart. And if you're not comfortable with a pullback to 400 to 420, then you're not really in this as a long-term position, I would argue. So again, if you want to protect yourself though, because it's been a big move, take a percentage off the table. You could sell some covered calls. That's about all I can think of. From Tate. But options that are getting out with confidence, not too early, and become liquidity. I'm not really sure what you're saying. 22 RSI, unless the stock market is not winning on a dollar crash. Yeah, exactly. I agree. I think that the dollar looks like it's due for a bounce. Back over to the YouTube from Cyril. What would be the reason for the dollar weakening? The federal government's actions, the Trump administration's actions would probably be the biggest reason for that. I mean, we've spoken about this in the past, and I really try not to be political with stuff, but it has been the thought process of myself and Charlie McElligott and some really smart analysts that the goal that the Trump administration wants a weak dollar. He'll never, I don't think, admit that because it's just not how he rolls. I'm sure publicly he would say similar to what he said earlier today, like the dollar's just fine, the dollar's strong, the dollar's great. But he actually wants a weak dollar because it buoys all these assets and buoys the stock market, and that's what he wants. Back when the tariff tantrum thing kind of failed back in April and March, and then we, went back on the vast majority of the tariffs that Trump was saying that he was going to do. Charlie McElligott was talking at that time that the strategy shift is going to be going from tariffs to weakening the dollar. And, obviously there's been some degree of both. There has been obviously an increase in tariffs compared to where we were, let's say, in 2024, but nowhere near what has been threatened at certain points. And instead, like I was saying earlier, the dollar in 2025 was one of the worst years in history for it. And obviously, we're seeing a very, very concerning 4-day move here as well. So I hope that helps. From the YouTube, from AR, sorry if you mentioned this, but are you short SLV ETF or futures? I don't trade futures. I'm short the SLV ETF. I had been short AGQ as well, but I got out of that. Yep, that's what I got. All right, folks, anything else for today? All right, have a great night. See you all tomorrow.